Stop. Don't think about stocks, don't think about crypto, and don't even ask whether the market is going to crash. Because right now, as you're watching this video, there is a question that matters more than anything else. A question that, if you get it wrong, won't just cost you money. It could erase everything you've spent a lifetime building. This is the real dividing line between those who build generational wealth and those who watch it disappear in a single cycle. So what is that question? It's not what should I buy next. It's this: what will actually survive when everything starts to break? And more importantly, what will go to zero and take your entire life savings down with it? Because this is the part you won't hear in financial media. We are no longer in a normal market. We are in one of the most unstable macro environments in history. And when the system starts to shake, only two types of assets survive. Everything else disappears. Stop, because the numbers you're about to hear are not just data. They are signals. The United States is carrying $38 trillion in debt, and that number is increasing by $6 billion every single day, not per year, per day. Meanwhile, global central banks have quietly accumulated over 1,045 tons of gold in 2024 alone, marking the third consecutive record-breaking year. And silver. In 2025, it surged 143%, from $33 to $72 per ounce. One of the most explosive moves in modern history. Gold didn't stand still either, reaching $3,400 per ounce, up 70% in just 1 year. But at the same time, the 2008 global financial crisis showed us a cold reality. Assets labeled Drabble can become worthless overnight, and in 2022, Terra Luna erased $40 billion in less than 72 hours. These are not isolated events. This is a pattern that has repeated itself in every major financial collapse in modern history. And today, you're about to see it more clearly than ever. 5 types of assets that have survived every crash, and a graveyard of assets that went to absolute zero when the system broke. If you are holding money, any amount of money, this may be the most important video you watch this year. Not next year, right now. Because every signal that appeared before past collapses is now appearing again. Stop, because if you don't understand this mechanism, you will always arrive too late. Markets don't crash randomly. They operate in a repeating 4-stage cycle. Stage 1, cheap money floods in, assets rise far beyond their true value, and everyone believes this time is different. Stage 2, leverage surges, assets become a cultural phenomenon, everyone is talking about them. Stage 3, cracks begin to appear, a link breaks, liquidity disappears, panic spreads. Stage 4, the purge, weak assets go to zero, strong assets absorb the capital and surge. We've seen this before. In the late 1990s, the Nasdaq Composite rose over 400%. Companies with no revenue were valued in the billions. PE ratios hit 90, an unsustainable level. On March 10, 2000, it peaked at 5,048. 2 years later, it was down 78%. Trillions of dollars were wiped out. Pets.com e-toys went to zero. But the money didn't disappear completely. It moved. While the S&P 500 fell nearly 50%, gold quietly began to rise from $280 to over $400. Farmland continued to generate returns. Then 2008, the credit system collapsed. Lehman Brothers went bankrupt. Markets plunged. This isn't theory. This is a map. The question is, what stage are you in before everything breaks? Stop, because this is the part most people miss and pay for. In 2009, the stock market had lost over 50% from its 2007 peak. Banks that had existed for over a century disappeared overnight. Employees showed up to work and left carrying boxes. Pension funds evaporated at a pace no model had predicted. But look deeper. While the S&P 500 collapsed, U.S. farmland still generated nearly 30% in returns. Gold rose 25% in 2008 alone, and nearly doubled from 2007 to 2012. U.S. Treasury bonds gained 17%. Meanwhile, Lehman Brothers, Bear Stearns, Washington Mutual all went to zero. Then came 2022. The pattern repeated. Post-COVID easy money pushed crypto to extremes. Bitcoin surged from $10,000 to $69,000, and then Terra Luna, a stablecoin with no real backing, promised 20% yields. In just 72 hours, everything collapsed. $40 billion vanished. FTX triggered a domino effect across the entire industry. Bitcoin dropped 77%. But gold? It held. Silver? It retained value. Farmland? It didn't collapse. This isn't breaking news. This is a law. And now, April 2026, the same signals that appeared before every major crisis are showing up at the same time. The question is, will you recognize them before it's too late? Stop, because what you're about to hear is not news. It's a signal. The US government is now spending more on interest payments than on national defense. At the same time, central banks are quietly selling bonds and shifting into gold. Japan, China, they're stepping back. And that $38 trillion in debt, it's growing at an unsustainable pace. But here's what really matters. In 2025, gold surged 70%. Silver jumped 143%. This isn't random. It's the system sending the same signals that have appeared before every major crisis. Gold is not a new story. It is history. 2,000 years ago or today, its purchasing power is nearly unchanged. It cannot be printed. Supply only grows 1 to 2% per year, and every time the system shakes, gold doesn't just survive, it rises. 2000 stocks collapsed, gold held. 2008, the S&P 500 fell 37%, gold rose 25%. 2020, gold climbed 32% during a global pandemic. And silver. It's the most misunderstood asset, both a monetary metal and an industrial one. When the economy is strong, it rises. When crisis hits, it rises too. And farmland? In 26 out of 28 down quarters, it still gained. This isn't a trend. This is a law. The question is, are you aligned with the flow of capital or standing against it? Stop, because this is where you begin to understand what a real asset actually is. No matter what the market does, people still need to eat. And only 7% of the Earth's land is arable. Supply doesn't grow, population does. That's an equation that cannot be broken. When recession hits, rates fall. Land becomes cheaper. When inflation rises, land prices rise with it. When markets panic, capital moves into tangible assets. Farmland isn't flashy. But in 2008, when Lehman Brothers collapsed, land in Iowa still went up. That's the power of physical reality. Next, US Treasuries, especially short-term. Not all bonds are safe. Long-duration bonds can lose value during inflation. But 3 to 12-month T-bills. They are the shock absorbers of the system. 2008, up 17%. 2020, yields dropped near zero. Investors paid just to preserve capital. 2022 returned over 5%. They don't grow, they preserve. And then Bitcoin. Not a short-term safe haven. It moves with stocks during panic. But through every crash, it has never gone to zero. Here's the uncomfortable truth. In a crisis, the goal is not to grow fast. It's to survive. Stop, because this is where the line is drawn between losing money and losing everything. Every crisis leaves behind the same footprint. Some assets fall and some disappear completely. In 2022, Bitcoin dropped 77% from $69,000 to below $16,000. But then it came back, reaching a new high of $126,000. That's the difference. It survived the cycle. But many others didn't. Pets.com, Webvan, Enron, WorldCom. Lehman Brothers, 158 years of history. All went to zero. Then came Terra Luna, $41 billion in market value erased in 72 hours. From $116 to nearly worthless. FTX collapsed, customer funds vanished. This isn't a correction, this is eradication. The pattern is clear. If an asset has no intrinsic value, no real demand, it doesn't decline. It disappears. But the things tied to reality, gold, silver, farmland, treasury bills, they don't require belief. They exist because the system needs them. And now, 2026. US debt at $38 trillion. Interest payments exceeding the military budget. Central banks quietly accumulating gold. This isn't a warning of what's coming, we are already in it. The question is, are you holding something that will recover, or something that will disappear? Stop, because this is where arguments that sound reasonable begin to collapse. Technology does not change human nature. Leverage still exists, speculation still repeats. Panic still spreads, and American exceptionalism. The British pound dominated the world for 200 years, and then lost that position in just a few decades. No system escapes the laws of debt. 38 trillion trillion is not just a number, it's a gravitational force in finance, and no exception can defeat compound interest. And gold and silver are outdated. Then why are central banks buying over 1,000 tons every year? Here's what you need to understand. This is not about panic, it's about positioning. History does not favor selling everything. It favors strategic repositioning before the shock hits. Gold defense against currency debasement, silver still undervalued, with surging industrial demand. Farmland endures every crisis because people must eat. Treasury bills ultimate liquidity when the system tightens. Bitcoin, long-term survivor, but not a short-term safe haven. And here is the unavoidable test. If the narrative disappears tomorrow, what remains of your assets? If the answer is nothing, that's not risk. That's an outcome. Pets.com, Enron, Lehman Brothers, Terra, FTX. They all had a story. They all had belief. And they all went to zero. The assets that survive do not need belief to exist. They are anchored in reality. And right now, 2026, that pattern is repeating. It doesn't wait for you to understand it. It simply reflects the position you've chosen.